Hello, today is Tuesday, the 8th day of October 2013. My name is Derek and welcome to today's silver chart analysis video. Let's try to make sense of these charts using Fibonacci retracement, exponential Fibonacci retracement from the highs in the summer of 2512 and the lows that begun the summer at 1821. Originally, when the retracement took place, there was not support found within the level. No, it went through it and then found resistance. But then as it made a lower low, it got above it. Thus, these three candles in here created what I like to call the Bart-Simpson head formation when you shorten out the charts. I will not be showing the hourly today. It'll be the daily and the weekly. But that's a situation where you go up fast and then consolidate tightly in a sideways movement and then go back down again, which is what occurred within here. And then it's been doing a whole bunch of nothing. I've been talking in the recent videos about the 22 level. That was resistance for so long, and 2150. That really established the sideways range for 2 weeks. But it did come down to the 61.8% retracement. It does say 38.2% on here, but from this point here, this is going down 38.2, and this is going down 61.8. So it so far looks as if it's having successful retracement within this level. Ideally, what's nice to see is for it to break a little bit higher, come back to this 22 and 2/9 level, and then break above this here, and then the 18 average will start to rise again. You would thus be looking for a test of 2512. You get there, and then at that point you'd be looking for maybe a possible retracement. You'd be hoping on a bullish level for it to be light and then break through that mark. But right now it hasn't gotten above this level as of yet, which is the 22 mark. The 18 average is flat pretty much now, and it's a lot easier from this point forward to extend it to the weekly chart. But before we do that, I'm just going to let you know some other significant Fibonacci retracements that are more short term. Number one is from this point here to here. Now what's interesting is when you have a move where you go down to the second fib level, the 61.8, and it hits it exactly, then what will always be the case is this line here would then become the 38.2% resistance from this high to this low, which would make the 61.8% level somewhere, well, it's the exact same distance, so it would be in at around 2330. That would be the next, or 2330, that is correct. Yes, that would be the next significant level. The other key short-term level is from this low to whatever this high happens to be. Now, why this one is really important is when you have the successful 61.8 retracement and then you lift higher, then anytime you notice that this pattern fails, then you would still be above this mark here, but a lot of cautionary signs to state that this is a failed move, the fast move is going to be occurring afterwards, and lower prices will be on its way. Of course, that is nothing to show that that's the case yet, but it's something to look for, because if this area holds, it continues further, that's typical market retracement. And as I said a couple minutes ago, it's easier to look at this further on the weekly chart, which is what is going to be done. Okay. So you have this long sustained bear market, a situation where this 18 average band was heavily declining, and price action stayed below it for pretty much the entire duration, and even within here, way below the 18 average of lows. It was a long time, pretty much the start of the year to the start of the summer. That's about a half a year on this downtrend. But you had this move in here which got above the 18 average, changed its direction from down to barely higher. But now what's occurred for about a month is finding support within this band. The 18 average of lows is 21. The 18 average of highs is 22.60. So that's about a $1.60 range or so of the neutrality. Now, when you break above it, one of the things that I like to see for a bull market is to come back, find support within it, which is happening, and then break resistance. Therefore, a clear break above 25.12 and about 25.50 should state that, okay, it's looking as if the market direction is changing and we should be in a multi-week bull market. On the contrary, signs for a failed move, well, when you break above here, are unable to find successful support within this, and then again that 18 average, which was declining before, is declining again, which would mean price action would go down to the low 20s, high 19s, that oftentimes from failed moves create fast moves, which this would be the failed move, and the fast move would be one, of course, breaking down below the low. Now, I don't think that is going to take place, but I don't know what the powers that be are capable or what they are planning on doing. So again, it's just simple methodology. You break above this resistance, most likely a multi-week bull market. The next resistance would be here. Thank you for tuning in.